All right, everyone, welcome back to Masari's Unqualified Opinions. I'm Ryan Selkis at 2-Bit Idiots. We've got another terrific interview today. Well, we don't know that yet because we haven't done it, but I'm just going to project in the future that this conversation with Alan Curtis from Radar is going to be something that you're going to want to tune into on iTunes, Spotify, or maybe you're watching it live on Twitter right now. Alan and I have known each other for a couple of years. He was a pioneer as a relayer in the decentralized exchange space. And obviously that sector of crypto, I would argue, went through its peak of inflated expectations. And this was a year in 2019 where things kind of crashed down to earth, and some of the structural challenges of running a DEX really came to light and became very obvious. So it's kind of a double whammy of the market just cooling off and volumes getting lower just in general, and then you multiply that by the fact that DEX was already a very small part of that overall market. So we're going to talk about some of the structural challenges to DEX in general, which we haven't heard nearly as much about in the last 12, 18 months, but it's still very structurally important. And then we're going to talk about Radar and some of the full stack solutions that they're building, and kind of how they think about the industry more generally, but in particular, market making and things like that. In addition to maybe other things that Alan might want to cover, as he has been a bit of a man of mystery in the last year, which we were just talking about off camera. Alan, why don't we start with your backstory, as I like to do with all these conversations, just how you got into crypto, and then Radar in particular, how you came to form an opinion on that being a killer market that you wanted to get into. And then, of course, we can walk through the evolution of the project and the, I hope, resurgence for that sector in general, but certainly for some of the things you're doing as well.
Yeah, happy to be here, Ryan. Thanks so much for the invite. I'll start with the origin story, as you put it. I've actually not really shared our origin story before. I've loosely in a few tweets and articles here and there, but it began in a winding way. I think much like many folks in our industry, is very orthogonal. And for me, it began with some graduate thesis work I was doing, the intersection of economic security, financial inclusivity, and health outcomes. I heard of Bitcoin, but unfortunately did not fall down the rabbit hole and did not invest and did not pursue. Out of school, I was the program director at an incubator here in Colorado, helping companies build their team, raise money, get to market. I did that for many years. And during that time, I met Caleb, who's now my co-founder and CTO, but at the time, Caleb was the very first data science hire at Coinbase. And thankfully for Caleb, he pulled me down that rabbit hole in early 2017, actually. And we spent most of 2017 in my basement with a few other guys, whiteboarding furiously about what would it look like to build a company in this space, and what are the hard problems that need to be solved. And to your point around DEX and the frontier or roller coaster ride that it's been, I think this is a good opportunity to talk about Radar's vision and Radar's strategy. And I think if you go to our website and maybe you've met me before and I've walked you through it, it's not clear if you're just a user of Relay, right? If you're just a user of Relay, you assume that we are a decentralized exchange, and that is what we do. When in reality, Radar's a multi-product company. It always has been and always will be. And the vision for us, right, the North Star, the why Caleb and I build products together is this idea of building products for our next financial system. Now, the building products part, that's pretty straightforward, and we're going to talk about that today. But it's the our next financial system that I think is a head scratcher for some folks. So when I say our, I don't mean Radar our, ownership our, I mean the collective our. And when I talk about our next financial system, I don't know exactly how it's going to feel and look like and how it's going to taste and how it's going to work. But what I do know a few things. What I do know is that it's going to be a hell of a lot more fair. It's going to be a lot more transparent. It's going to be a lot more inclusive. And it's going to take some time. A lot of time. And we believe that blockchain is the right tool for the job. It's the right database to build this new financial system on top of. But The reality is it's a little bit of a frontier right now. And this is where our strategy comes in. And this is what we can talk about throughout the call. So our strategy, right, is to, it's not just endure the frontier, it's really thrive on the frontier.
Mm-hmm.
I think there are 3 ways to do that. And this lines up with our product strategy. The first way, right, from a Wild West frontier perspective, so you go all the way out west and you build a destination. These are things like general stores or saloons, right? And this is what we did. This is what we've done with 2 of our products, right? One of those destinations is Relay, which is the peer-to-peer exchange that we've built on top of 0x on the Ethereum blockchain. We launched that in 2017. And like Ryan mentioned, we had this incredible run. And as the market sort of started to go south, as our category compressed, Relay today owns a large part of the small market. The second destination, or the second shingle that we hung, is Redshift. Redshift is a peer-to-peer payments tool, payments rail on the Bitcoin blockchain using the Lightning Network. Again, another destination. And the reality is that a lot of these destinations in the Wild West frontier, they don't get a lot of foot traffic, right? You get these crazy other cowboys that want to come and kick the tires and visit the general store and saloon. It's really difficult to build a thriving business with just destinations on the frontier. And so you must do the second thing. The second thing is infrastructure. And we've just announced a product called Deploy that I'm excited to talk to you about on the interview today. The infrastructure piece, right? This is how you get the complacent, happy people on the East Coast to get on the wagons, get on the trains, and actually make their way out west and be pioneers, right? The wagon wheels, the train tracks, picks and shovels. And then the third way, and maybe the most important way to build a business on the frontier, and the third piece of our strategy is building and selling maps. You need maps, right? You need maps to know where the heck you're going, right? Do I cross the Mississippi here where it's really wide, or do I go further north where it's narrow? What mountain range should I avoid? And this is what we've done with Ion, right? Ion is the homepage of the Lightning Network. It's a community. It's wikis, guides, tutorials, newsletters, everything that you need to actually go out west. And so, Ryan, the vision for us, the vision at Radar, right? Building products for our next financial system, it's going to take a while. So the way we do that, build destinations, infrastructure, and sell some apps. And 2.5 years in, we've got a few in each category, and excited to tell you a little bit about Deploy in a bit.
There's a couple schools of thought, right, in startups generally. One that is, that kind of predominates is, focus very, very narrowly on a thin wedge that can help you dominate a small market, but then ultimately, grow the pie as the market grows, and ultimately you can extend the product in other areas. And everybody that's ever started a company kind of knows this is a truism, and it's like the advice you always get. I find Messari is actually in a very similar situation where we are in a small market, but we do have multi-product focus, all of which we kind of view as complementary. But for us, different data and information products seem to make sense. For Radar, how have you kind of taken this divide and conquer approach? Because the 3 things that you just mentioned are very different. And it's harder to see how complementary they are, right? So is it spin up a product, get it to kind of good enough until the market picks back up, like with Relay? Is it, and then kind of move on to the next and lay a bunch of those foundational bets with the expectation you'll redeploy capital wherever kind of the clearest fit is during the next cycle? Or is that kind of selling short the interrelatedness of some of these tools that you're building?
Yeah, great question, Ryan. And it's one that every investor I've talked to, every board member, or every new hire, potential candidate we talk to, right? Because they read Paul Graham's notes online, or they Y Combinator, or they talk to their friend at his company. They're like, aren't you just supposed to do just the one thing? And the one thing, you get your product market fit, and then you raise financing. And so I think that the majority of the time in established market, that's the way to go. Double down, get ready to die on a hill, create a category, and burn the boats, right, and go after it. And I think that is an effective approach when it's clear you have product market fit, when it's clear how the market is shaking out, when you have strong position. Now, we are in this incredibly dynamic market that is like decentralized exchange goes up and down, infrastructure goes up and down, DeFi, right, comes out of nowhere, stable coins come out of nowhere. And so for us, the name of the game is agility, and the name of the game is hedging our risk. We want to be here to usher in the next financial system, and that's going to take a while. And it is not clear today how the roulette wheel, when the roulette wheel stops spinning, where the value is going to accrue, right? It's clear that centralized exchange, check, those guys are making money, right? Compliance companies that are servicing these centralized exchanges, check, they're making money. Some of these token issuers, they've made some money. It's not recurring, but it's there. And so the goal of Radar, right, is to create as much surface area as we can in the destinations, infrastructure, and maps. And as the roulette wheel starts slowing down, then yes, to your point, Ryan, double down and allocate capital where we're having that breakout sort of escape velocity growth. We've had it once with Relay, right? We went from 5 guys in my basement working on an app to 3 months later having users in 150 countries, trading 100 million plus in volume. And when we had it, we thought we had it right there. And so we were doubling down, burning the boats, and then the market started to fade. And so we blossomed into these other categories. So I think what you'll see in the coming years is clarity from the market, from regulatory perspectives, we'll see what happens with DeFi. Some blockchains will launch, and we'll be able to focus on one of the 3 in a really defined and focused way.
Where are volumes now, just by comparison? So if it's 100 million at the peak.
Sure. Yeah. So good question. So I'm doing all this end of the year planning now. I'm going to share this publicly. Maybe by the time this podcast airs, it'll be out. But this year, so 2019, Relay will have traded over $100 million cumulatively throughout the year of 2019. Compare that to the month of like February 2018, where we did, I think, 60 million in 1 month. And so what you see in our graph, it looks like a bimodal distribution. So we very quickly went from Q4 of 17, Q1 of 18 to over $100 million in volume. And then 2018, the graph started to dip down. And then we've actually, it's been up and to the right this year. Our category is growing, but now we're sharing that pie graph with Uniswap and Bancor and IDEX and a few other venues as well. So the category itself is doing about $5 to $7 million of volume per day. And then Relay and we sort of oscillate in, are we first, second, or third place throughout those days.
Yep. So let's talk a little bit about the decentralized exchange market. So I think over the course of this conversation, I want to come back to Ion and of course we'll talk about Lightning and some of the tools you're building there as well. But let's talk a little bit more about decentralized exchange first before pivoting. So how would you break down the different DEX models, both structurally in terms of how they function and some of the trade-offs, Radar's or Relay's positioning within that, and then ultimately how the infrastructure providers make money? Because it's very obvious how a centralized exchange makes money. You make money on the difference between the bid and the ask, or trading fees, or a combination. With DEX, because a lot of it is facilitated with smart contracts, it's just fundamentally different. And there's different designs like bonding curves or decentralized order books that people are just not as familiar with. But I'd love to explain like I'm 5. That's about the level I operate at anyway. For our audience too.
So I think to start, we should rewind the clock to why was our first product a Relay, right? Why did we want to build in this decentralized exchange space? Why didn't we build a portfolio tracker or a game or any of the other million things that was on the whiteboard back in 2017? And we decided to move forward with Relay for a few reasons. Number one, I was really fortunate to have Caleb sitting next to me as the architect. Caleb is one of the only people in the world, maybe the only person in the world, who's built a brokerage or has been involved with building a brokerage at Coinbase, actual centralized exchange with GDAX at Coinbase, architected the Relayer with us, and then with Redshift, which we'll talk a little bit about here, has an RFQ, a request for quote design, on top of Lightning. So Caleb's been involved in pretty much any exchange design that's been created to date. I think the only thing he hasn't built is a smart order router. Anyways, so That was one reason, is we had the expertise from Caleb. The second reason is we wanted to go to market with a product that would help us achieve global awareness, right? And so, for example, if we built a tax planning tool, right, maybe that's useful in the US, but we don't get the 150 country distribution that a peer-to-peer exchange would. And number three, we wanted to build something that was very closely related to this ethos in our space around our next financial system, one that's more fair, more transparent, more inclusive. And so for many reasons, for those three reasons, right, we decided to go to market with peer-to-peer exchange. So we studied traditional exchanges and we looked at how those rolled out, right? The electronification of markets thesis. It starts with in the pit trading, it moves to over-the-counter trading, which moves to order books, which moves to a request for quote design, which moves to smart order routers, which moves to dark pools. So we saw that playing out in traditional markets, and we looked at, well, where are we in and from a crypto, where are we from in the crypto space? And this was 2017, and so we're about 7 years into exchanges, right? Gox and others, Bitstamp and others hadn't been around that long, and for us, the natural extension was to move to peer-to-peer markets. We are actually the third ever peer-to-peer market to build on top of Ethereum. And to answer your question directly, the mechanism design we use is this open order book. Now here's the explain like I'm five part. That wasn't much. Explain like I'm five. This will be the more simple part. We decided to use 0x's smart contracts to create this open order book on Relay. And you can think of that like Craigslist. Craigslist today, you show up and you sell your bike, you sell your couch. Some stranger shows up. You don't know them. They don't know you. Craigslist doesn't take a fee. Craigslist doesn't match you guys. You guys exchange $50 and you go on your way. That's like what happens on Relay, right? We're not matching buyers and sellers. We don't have a smart contract that you're depositing into. We're not even charging fees on these trades. Frankly, we are a global bulletin board where buyers and sellers can meet and trade directly wallet to wallet. That is in stark contrast to the many other types of decentralized exchange that exist, right? So there's everything from automated market makers where you deposit into a smart contract. There's decentralized exchanges with matching engines where they do buy and sell. There are decentralized exchanges that are just run by the actual company itself, and they act almost like a bank teller as the market maker themselves. And Ryan, what I'm really excited about is across this category of decentralized exchanges, you have maybe 5 different models that are competing, and we're seeing what the market likes, what they don't like. This year, Uniswap, automated market maker, has really come out of nowhere and been solved a lot of these liquidity challenges and user experience challenges that an open order book like ours was facing.
Uniswap is interesting because there's no way for Uniswap itself to really make money, right? The liquidity providers, the folks that actually make the markets, and Uniswap are the ones that ultimately are rewarded with the fees and the rewards. That is interesting, and it's definitely fascinated investors within the industry because they're like, oh, how can I make money off of this? And the answer, in short, is, well, you can't because it's better for small traders than it is for large traders, which is the exact opposite of all kind of centralized exchanges.
Yep.
And arguably is better for illiquid assets than it is for liquid assets. Uniswap, definitely one of the top stories, I think, of just in crypto, of the year, especially, given the history and background of the project, coming out of like a small Ethereum Foundation grant. But what are some of the other the nice part about seeing these different models out in the wild? One, you kind of get a sense for what people want and what works, but that's not universal. Right. So if Uniswap is good for like the little guys that are looking for access or exposure to illiquid tokens, right? Where do the other DEX models fit in? Over time?
Yeah, good question. So I think an assumption that some people make about me or about our company is that we're under this belief that decentralized exchange is the way forward and centralized exchanges must perish and we should replace. I don't feel that way. I feel like we are deeply relevant to a long tail of global customers that can't or don't want to use some of these centralized exchange, right? We don't have fiat on ramps. We depend on the Coinbases and of the world for that functionality. We don't have KYC, AML, right? So institutions around the corner from you in New York, right? They're not coming to Relay today, but our users in South Korea, our users in the Philippines, our users in South America, they care deeply about Relay. They care deeply about using all these different venues. So if I had to look into the future and project maybe just in the next year or so, what are we going to start seeing? Number one, there's a real space race happening between 0x and between Kyber right now. Right? Both 0x and Kyber have come to this conclusion, similar to the electronification of markets thesis, that they need to be sharing and aggregating liquidity. And so you're seeing both protocols updating to aggregate other on-chain liquidity. So when things like Uniswap break out and have success, we can pull that liquidity into venues like Relay. So that's one thing to keep your eye on, is that space race there. We'll be updating right alongside 0x. We'll be able to aggregate all of that liquidity from all these on-chain sources. Number two is the let's call it the inbound of automated traders or professional traders. So in the last 2.5 years, if I had a graph, the graph would look up and to the right about professional market makers, professional automated traders who are starting to identify these peer-to-peer markets as the source of new alpha, as a source of less tight spreads than the centralized exchange. And decentralized exchanges are finally building out the infrastructure and stability that they need to welcome these traders. So you're going to start seeing, I think, a lot more automated trading volume come in. And then maybe the third trend is we've been approached by a lot of large centralized exchanges about hybrid decentralized exchanges, right? I guess I won't name any names, but anybody who's launched a project that looks like maybe like an ETHFinex or a Binance DEX, we've talked to those centralized exchanges, and they're all excited to participate in this market. They're just scratching their head trying to figure out some of the regulatory questions, how to share some of the order flow back and forth. But I think 2020, it's a good year to be a decentralized exchange. It's a tough year to launch a new one, but it's a good year if you have an established liquidity pool, if you have automated traders who are integrated with you, and really excited for some big announcements for Relay in the first quarter, actually.
What are kind of the reserve assets of DEX right now? Because I'm skeptical that stable coins like USDC or Paxos, right? Like some of these regulated or quasi regulatory blessed, right? Stable coins are or should be really fully integrated into DEX, because there seems like there's way too much of a risk of like account seizure or some regulatory headwind that would really wreak havoc on that market. In that case, it's almost like a two-horse race between DAI, which everybody talks about in DeFi, and Tether, which you could argue is still the top decentralized stablecoin, in the sense that that even if it is not fully reserved right now, there are so many important financial entities within the global crypto ecosystem that seem like they will not let it fail or get dissuaded or scared off by some of the underlying issues with respect to where the money is held, because it's so structurally important, right? So even if it's 50% reserved or 30% reserved at some point, there seems to be a collective understanding of like, we're all in this together, and if this asset fails for the foreseeable future, we're all in a lot of trouble. So we can't let that happen.
Yeah, look, to be clear, a lot of the volume across all the relayers and decentralized exchanges has been DAI, ETH, and then just a few assets, the 0x's, the Kyber, BAT token, right? You're not seeing this long tail of inventory like a lot of us.
Have you started to see an uptick in the ERC20 tethers since that is?
Yep. Okay. That's certainly been the case. I think if you had talked to me in early 2017, I would have told you we are onboarding the world to the token economy, and everything that can be tokenized will be tokenized. Now, at the time, I didn't know the quality of all the teams building tokens, but I read the blog post and I saw the tweets and I was so excited about a token for airplane and a token for storage and a token for computing. And I was like, oh, we'll build this venue and it will provide token abstraction. And when you go to use these dApps, you'll integrate with, and of course that has not been the case. And many of those teams didn't ship and many of those teams failed on their, their missions. And we've been left with just a few teams that are making tremendous progress. I think DAI, the Maker team, is a great example of that. So Ryan, what I do want to mention is just around this category of decentralized exchanges. A lot of the innovation's been happening around Ethereum, right? It's using smart contracts. And the reality is, if you talk to these automated traders, or if you talk to these more prosumer day traders, they want two things. Number one, they want access to Bitcoin. And you can't get it. You can get wrapped Bitcoin, but it turns out that's not quite as exciting. So they want access to Bitcoin, and then they want faster trading. And so what we did, our R&D team took a look at layer 2 protocols. We looked at wrapped Ethereum. We looked at pretty much anything under the sun that would allow us to meet those two customer mandates, and that led us to Lightning Network. And what we've built with Redshift is very different than what we've built with Relay. It's on the Bitcoin blockchain, where Relay is on the Ethereum blockchain. We don't use 0x. We use HTLCs, hash time lock contracts. And we're not using this open order book design. We're using a request for quote design, where a customer would show up, a trader would show up, they would request, right, I want a quote, and then the market makers that use Redshift would provide a quote with the spread built in. And so we're really pushing the envelope in terms of what decentralized exchange is capable of, how fast we can do that, what inventory we can support. And on Redshift today, we just support Ethereum and Bitcoin. It's a new product, but throughout 2020, we're going to be adding additional assets there, and we're going to be offering true cross-chain atomic swaps, peer-to-peer, non-custodial, all the buzzwords here, we've got them. But the reality is we're finally fulfilling this promise of what decentralized exchange intended to do years ago.
It certainly would be fun to watch. The one question that I asked up front, though, that was not really answered is the economics of DEX, right?
Yep.
And so you don't need to disclose your revenue figures, right?
Sure.
But, with centralized exchanges, you can more or less back into 15 bips of volume, 15 to 20 bips of volume, kind of on average. That's a pretty quick and dirty estimate. And so at any given day of trading volume, you can extrapolate what their annualized run rate is, right? Or week or whatever. There's different models in DEX. It's not quite as simple, but how do you make money from that market when the market maker is in many cases automated?
Yeah, great question. So in many ways, it's the same as centralized exchanges. So if you look at a lot of the venues in the decentralized world, they're taking those fees on trade. So it's 0.2%, 0.3% is what is pretty traditional across venues. We have actually elected to keep our fees at zero. So since we launched Relay in 2017 to today, in the foreseeable future, those fees are at zero. And we did that because we don't want to create even more friction for liquidity to move into the decentralized world. We don't want to create another reason for someone to just, I'll stay with Binance or I'll stay with Coinbase. And that's been a strategy, that's been a decision I would do time and time again. It's what allowed us to go from relative obscurity, a few dudes in Colorado, to owning a really large part of this market. And along the way,
are you making no revenue then as a result from DEX?
Correct. Yeah, correct. Yeah, correct. Relay is not. We have not monetized. That is very much some people in the community call it this let's call it like a public good. Some people in the community call it like critically important infrastructure. We've contemplated many times about turning on fees there. Frankly, we have a really long-term horizon and radar, right? We're talking about this next financial system. And I want to make it really easy for liquidity to move into this space. As is the reason why we went out and raised some venture financing rounds. It's the reason why we're building additional products is to find other places that we want to monetize that won't create maybe as much friction to trialability of a new product or service.
Yeah, so I understand the strategy. I'm not so convinced that is necessary to compete, but I'm not as close to the ground. I would, if the competition is intra DEX, then maybe that's marginally helpful from a narrative perspective. But if it's DEX versus centralized exchange volumes, then you're just talking about a different user base, right? You're talking about folks that might value their privacy, the transportability, the self custody, all the things that are kind of more like hardcore, right, in the community, and not for the faint of heart. But it seems like a different user that's not necessarily going to care, and in some cases might actually feel more comfortable if they knew, okay, I can execute this type of exchange, but by executing this type of exchange on this provider, or using these protocols, I at least know that they're going to be maintained and updated so that I can do it again someday.
Sure.
Because
Yeah.
if there's no model whatsoever, then this is all, you can't
Yeah.
run on venture capital forever, right?
You bet. We're not running a nonprofit. There will be
Yeah.
a time and place to monetize Relay. We have liquidity goals, we have volume goals around that.
Mm-hmm.
And frankly, I agree with some of what you said around, right? If we decided to turn on fees tomorrow, right? It's not everyone's going to pick up and go home and say, fuck those guys. Right. There's a lot of let's call it brand love for Relay.
Mm-hmm.
There's a lot of integrations into Relay liquidity that are, I think, very sticky. It's just picking the right time and the right place to do that. I'm really proud to say that for most of the space, we've been the gateway integration into decentralized exchange. By making it free, we've really increased the flywheel of trialability for different teams and companies. It's really nice to be able to call an automated trader, or when I connect with the project and say, look, just integrate with our liquidity, right? We're not going to charge you for it. Try it out. And that is, our surface area has expanded dramatically. So in the future, not a nonprofit, a for-profit, but
fair
right
enough.
Now, yeah.
And is that an approach that you've taken cross product? So why don't we use that as a transition point to talk about Redshift and Ion?
Yeah, great transition. So with Redshift, right, I mentioned we're moving to this RFQ design, and we're really putting the liquidity provisioning in the hands of our market making partners who are providing these spreads. And so Redshift, guess what? Does not charge a fee. The market makers get to decide what that spread is. So if you go to Redshift today, you want to pay Ethereum and get Lightning Bitcoin back, a market maker is going to be on the other side of that trade, and they're going to decide what to price in. Frankly, we're seeing like pretty low, pretty tight spreads there already. But similar approach for us. So increase the triability, increase the throughput, show off what a cross-chain atomic swap actually looks like. A lot of people look at this product and are confused, and adding a fee on top of that, we've seen that can increase friction. So again, not a nonprofit. In the future will be monetized.
Sorry, maybe I missed it, but is Redshift working with Lightning now, or is
Yep. Yeah. Good clarifying question. So back to this R&D question, right, from Ethereum exchange, where people were asking for faster trades and access to Bitcoin. So we went and did all this work, and we identified the Lightning Network and hash time block contracts as the viable mechanism to build this RFQ exchange on top of. But we had this epiphany, Ryan. We realized that if we just rolled out Redshift in early 2019, no one was ready for a Lightning Network-based peer-to-peer atomic swap. Like, the market just didn't get it. No one had wallets. There wasn't a MetaMask that you just easily download and get started. So we actually
and to be clear, when you talk about atomic swaps on Lightning, you're talking about trading assets on Bitcoin Lightning, or you're talking about a bridge from Bitcoin via Lightning to Ethereum?
You bet. The latter one. Yeah, a bridge. And no one had built it. No consumers weren't ready. Market makers certainly weren't ready. And so we felt this fiduciary duty, right? We felt it was incumbent on us to build some of this education in the market, to create some core competency in our users. And so Ion was born, right? Ion is a homepage of the Lightning Network. You show up on radar.ion.tech, ion.radar.tech, and you're going to find guides and tutorials and wikis and everything you need to understand what the heck is going on. And then, of course, at the bottom of that funnel, you understand how to use and transact and integrate with Redshift. And that's been a journey of 2019, right? Our foray into Lightning, establishing brand credibility in a new space for us, hanging a shingle, building a destination around Redshift. I'm really excited that we did it. We got it done. We're being integrated into a lot of the biggest Lightning apps. Volumes picking up there. A lot of market makers have reached out to provision liquidity. So early days for that market, still a very small market. Next year, I think we'll see Lightning start to hockey stick like it did earlier in 2019.
How do you measure growth there? Because on the one hand, the channel capacity is maybe artificially constrained right now. I don't know exactly where the caps are, but the last I checked, it was something like $6 million, million with an M. On Lightning. And so that's kind of part of it. And then there's another part where you shouldn't necessarily know the throughput in these channels. If you're running something like Redshift, you really are only ever going or ever should know the working capital required to run these. So that's there's a lot there that is uncertain, right? In terms of how quickly it scales, number one, but also just how do you even kind of monitor and measure success or market share?
Yeah, so I'd like to use this as an opportunity to explore a macro question that we struggle with, and then really answer your question at a micro level. So like the macro question is, how do you build customer intimacy? How do you collect business intelligence in a market full of technologies that are privacy preserving, where the customer don't want you to pick up a call or to talk to them on intercom or answer a support question, right? They don't want to be reached, they want their privacy. So how do you do that? When Radar was born, we were very much born as a product leader. Product leadership was in the DNA. What I mean by that, not arrogance around we were the best, but what I mean is that we are so focused on the technology and the product. How fast could we do a transaction? What could we do with 0x? What could we do with Ethereum? How does the technology work? And we've evolved into a company focused around customer intimacy. And it's really this, it's a stark difference. And if you had told me when we started that I needed to become a customer intimacy business, I would have said, get lost, right? We're focused on the tech and the product and being innovative. And now that we're here as this company focused around customer intimacy, what do customers want? How are they actually? It's easier to collect that kind of data. So to dive into the micro question, which is, how do I even know what's going on with Lightning? It's qualitative. It's talking to teams. It's having teams share their node metrics back with us. It's operating our own nodes and seeing what's happening with in terms of throughput. It's connecting to Bitfinex's node and Bitstamp's node and all the miners and understanding what's actually happening from the inside out. And the inside out tells a very different story than the outside in, right? When you look from the outside in, it looks like, well, capacity is constrained, Lightning Network maybe not growing, there's less tweets about Lightning than there was 6 months ago. But if you're in the sort of the eye of the cyclone, the eye of tornado there's a lot going on. All of the teams that we're talking to, nodes are up and to the right. There's a lot of integrations happening. The development velocity is moving. It's still a small market, right? And it's still measured in M's, not B's, as you said, right? Millions, not billions. And so our strategy, as with all destinations that we build, is right. Let's plant a flag and let's be there. Figure out the infrastructure and the map. So when folks show up, we're the only name in town.
So in terms of the two categories that you're talking about, peer-to-peer payment with Lightning and then DEX, which is primarily, built on Ethereum today, although Binance Chain now has theirs, and you're going to start to see, ETHFinex, same thing. Although ETHFinex is not its own chain, right? They're built on.
Correct. Yeah. Correct.
Are they used? Yeah. Is it their own Rails or is it Kyber or?
It's Ethereum and 0x.
They are 0x. Okay. So yeah, it's mostly Kyber and 0x in terms of the Rails, and then there's a bunch of liquidity providers around that, with the exception of like a Binance. And so maybe we'll see some more competitive elements like that in the years to come, but TBD. Those two areas that you mentioned are right at the heart of so much international but U.S. specific regulatory hair, right? And for the first time earlier this year, we had this pronouncement that was not official. I think it was part of a speech where one of the CFTC or SEC commissioners, I forget which one, basically question the bedrock principle of like whether is code speech, right? Or could you ultimately hold responsible developers of some of these technologies if they're misappropriated? And I think that there was justifiable, pushback on that, and many people wrote it off, and I think it probably will be a battleground for for legal cases in the future. How do you think about your own regulatory positioning, but more importantly, the regulatory positioning of any business that's shipping code that could facilitate decentralized exchange or peer-to-peer commerce that is inevitably going to lead to tax evasion and money laundering by people that choose to do that, but we'll be able to do so in like a peer-to-peer way online that is much, much more difficult to track. And we're going to leave aside the qualitative assessments of like whether those laws are good or fair or proper.
Sure.
I have my own political persuasions that's probably going to be more similar to the early Bitcoin community in terms of whether those are bullshit or not. But the fact remains that there is no one to really point the finger at just yet.
Sure.
How do you even get started with those conversations from a regulatory standpoint, or even internally when you think about your own risks?
Yeah, it's a really fair question, and it comes up each interview that I do or each person that I talk to. So I take this stuff really seriously. First and foremost, being compliant, following the right regulations, it's a moat around your business. It's a competitive advantage. It's not something, in my opinion, to be avoided. It's not something to run from. It's not something to try to re-domicile your company in a different jurisdiction to get away. I live in Denver, Colorado. I'm a happy customer of the U.S. government. I'm a happy customer of all of these regulatory agencies. These are important piece of our justice system. We wouldn't have this powerful heartbeat of entrepreneurship in our country without these swim lanes in place or without these guardrails in place. So before we started Radar in August of 2017, everything came to a full stop. Paid more money than I want to share to Morrison Forrester to check all the box, FinCEN, FTC, SEC, state laws, all you name it.
Can you share that? I want to push on that, because this is like people don't understand how much money actually costs to do this the right way.
We spent. Yeah, I'll share it. You're getting some good scoops, Ryan. We spent, so the early, seed stage, we hadn't even raised money yet. We had just formed our entity, $50,000. $50,000 in, I don't know if I can say boom, they'll probably yell at me, but that was for an investigation of all those different agencies. And then second, a very robust token compliance process. So I think a mistake that a lot of, I think I've actually might have shared that with you in the past. A lot of exchanges made the mistake of just adding tokens left and right and doing no due diligence. Instead, we went and hired from Goldman Sachs a full-time director of token analysis who's still with us, still drives that process 2.5 years later. And alongside that token compliance process, we went to market feeling good about our legal strategy. Over time, we've continued to invest and reinvest. Now we've picked up working with Cooley. We work with a two-man band, special SEC attorney group in DC. We've actually went and hired a full-time corporate counsel internally at Radar from Polsinelli that drives the process from a fiduciary duty to the company perspective. And so I think we have dotted every I and crossed every T that we can for our stage. To the point where when we did due diligence for our seed round and our Series A, investors came back quite pleased or continue as we talk with potential candidates to work at Radar. They do a lot of their own due diligence as well. They talk to their uncle who's a lawyer. They talk to their friend who's a lawyer, and it comes back, thumbs up. And so, Ryan, I think the secret sauce in terms of why we feel that we're very compliant with each of those agencies is something I'll probably keep closer to the vest because it is a real moat and it is a real competitive advantage. But suffice to say, regulatory is hard. It's capital intensive. You got to have patience. But if you do it right, you can build a real moat around your business and you can set a good example for what this space needs to grow and mature into. And I'm really pleased with the progress we've made there.
Fair answer, and certainly one that I'm sure is refreshing for the regulators and folks that you speak with. Um, it remains to be seen kind of where the responsibility ultimately lies anyway, right? When it comes to non-custodial decentralized exchange, because
Totally.
If you kind of button everything up in terms of the software that you offer, that still doesn't mean that you necessarily control the intentions of the end users, which I would argue is a good thing and a healthy thing, and ultimately creates enough friction where, like, if you're gonna circumnavigate the law, then you're taking a risk that you're ever found out and have to deal with the consequences. But this kind of dragnet surveillance and kind of sweeping indictments of customers. I go back to the Coinbase subpoenas and the 13,000 people from 2013 that have to deal with all this retroactive tax policing, and I just think it's going to be a nightmare. And one of the reasons it's going to be a nightmare is because none of the exchanges had any tax reporting like infrastructure in place. So if you send money from Coinbase to Circle, or Circle to Kraken, or an international exchange, or to a hardware wallet, that cost basis reporting is a complete nightmare, and it's only going to be 10 times worse in the 2017 crop, especially because you're going to have issues where some of these exchanges consolidate, wind down, sell for spare parts, move their domiciles, and you're going to have to do this in many cases like 4, 5, 6 years in the past for infrastructure that in some cases just does not even fucking exist anymore.
Yeah, EY is going to get a lot of business. They're going to be happy campers.
Yeah, well, you know what? The lawyers and the accountants always make money, right?
So Ryan, yeah. So the last thing I'll share, just to close the loop on regulation, and then I want to share about a little bit about Deploy. We don't trade securities. We don't transmit funds on behalf of our users. We don't ever take custody or touch user funds. We don't take fees. We don't match buyers and sellers. And so we have really gone out of our way to be compliant and work with regular. Now, that is not the case for many other venues. And so I'm with you, Ryan. I think there's a future in next year, 2021, 22, where you do start to see teams that didn't invest in compliance and regulatory get some slaps on the wrist or some large penalties. And so it's a matter of when, not if, in my mind.
So let's we'll close the loop. I think you mentioned Deploy, which sounds like the most recent project. So let's talk about that to wrap up.
Yeah, and this is what I was most excited about to come on the show and chat with you about. This is a major announcement for us as a company that is known for building consumer applications around DeFi and trading and payments. This has been, I think, will continue to be a big news to the community. So, Ryan, over the last 2 years or so, we have fielded dozens of questions from teams all over the world around node operations, node ops for short. They all wanted help knowing, how did you handle Geth and parity when you went to scale, when you went to market globally around the world with Relay, and how did you get started on Bitcoin so fast, and did you build indexing, and how many DevOps engineers do you have, and who should we have? And every time we would answer those calls, my CTO would do emails, or my VP of engineering, we would hop on Telegram and resolve an issue. And what we came to realize in about early 2019, mid 2019, is how stuck our industry is. The rate of development of new applications, whether they be games or DeFi, NFTs, you name it, is really slow right now. And the reason, if you look under the covers, under the hood, is because every team is investing not in marketing, growth, design, user experience. They're investing in DevOps, back-end engineering, blockchain engineering, protocol, because this, let's call it, this node infrastructure is so immature, right? It was designed for one person to run on one computer, not to support a business, not to support an international business, a global business. And there's this mismatch in the market where teams are investing in the wrong thing. They're not investing in customer intimacy. They're investing in product leadership, like we did. And so we're really excited to announce and roll out Deploy, the very first node ops platform. We launched it in early November to friends and family and a few small free trials, and we're going to be making a lot of noise with a loud launch here in the first quarter.
Is this something that's going to look similar to an Alchemy or Bison Trails, some of these newer funded companies that
Yeah,
running similar systems, or what's
good
the
question.
twist here?
Yeah, so let's talk about the state of Node Op. So we were one of the first customers of Infura, one of the first customers of Alchemy, and we depended on those companies. We were in a very similar position, right? We didn't have a lot of this infrastructure ourselves, and so we worked with these API gateway services, like some of the ones you mentioned. Problem is, over time, a few things happened. Number one, it got prohibitive from a cost perspective. Like 5-figure bills doesn't make sense when I could go hire a handful of great DevOps engineers to do it myself. Number two, as we had a global business, these providers that you mentioned are running out of local data centers. And so if you have a customer in the Philippines and there's a data center in Virginia, welcome to latency, welcome to bad user experience, especially if you have automated traders who build their livelihoods around latency. We got some rough phone calls around latency. And the third reason is customizability. So if you want to build a business around Bitcoin, you want access to Bitcoin nodes, guess what? Those providers don't do that. They're very much landlocked to Ethereum. If you want to add indexing, middleware of your own, build it, middleware from the community, good luck, you can't do that, right? You're just hitting an API. So from our perspective, Ryan, and the differentiator here around what is a node ops platform and what does it mean to have built the first node ops platform, it's really focused around customizability. We think that speed and reliability, while important and necessary, are table stakes, right? They're not sufficient. That everyone should be able to do that. Any node provider that you call and you work with, like reliability, speed, we should all be able to do that. But it's really about customizability. This is what we need. This is what our industry needs. We need modern software design. We need modern DevOps tooling. Right? We're not going to, one exposed API it's not enough to build an enduring company on top of it. So with Deploy, we have 2 tiers or 2 plans, right? And they're kind of similar to a carpool on Uber or a rental car, right? So this API gateway service, one endpoint, right? Everyone's going to hop in the same node. There's going to be 3 people in the back seat. Uber driver is going to drive as fast as they want. You don't get to control that. You don't get to pick the music, but you get there. It works for the job, and it's going to be a little cheaper. Or, right, you can pay a little bit more, and you can rent a car. You get to just decide how fast you want to drive. You get to pick the music. You get to decide if you want to pick anybody up and put them in the back seat. And Deploy is the first platform to offer both. Right? We have this API gateway service for teams that are just developing or getting started, or maybe just need that simple functionality. Then we have an owned node. You can SSH into the node. You can tweak and change any of the node parameters. You can add middleware and actually build something that a modern software team should be able to. And so that is Deploy in a nutshell. I'm so excited about this product. It's what I feel that our industry needs to take the next step of development velocity and shipping velocity.
Mm-hmm. Well, it sounds like it'll be a fun 2020 for you. Definitely looking forward to seeing how some of these things materialize. Hopefully the markets come back a little bit, or at least interest in some of these, smaller, more technically focused markets that seem to have built up enough traction this year, even though the volumes were significantly lower than the peak. And I'm sure we'll look for the rollout sometime around ETH Denver. Maybe be the timing here.
Yeah, good guess. So as we think about when to go make a lot of noise with Deploy, right, we could do a hardcore press blitz, or we could go and maybe backstop a big old hackathon in our own backyard. So you'll have to stay tuned to see when the noisy press releases start to come out.
Good. Alan, thanks so much for joining. It's been fun catching up as always, and really looking forward to what you and the rest of the team pull together.
Yeah, thank you so much, Ryan.
So we'll have this up if you're watching this now or listening to it. It's out in early January, but we'll have a lot more high quality, high audio and video quality episodes now that we fixed some of our infrastructure and equipment issues for the podcast. And much more to come. So thanks everyone for tuning in. Until next time, peace.
Thanks.